Welcome to our Japan Energy Market Update webinar. I am Risa with Skipping Stone Japan, and I am the moderator for this webinar. Our speakers today will be our special guest, Bob Takai, CEO at EEX Japan, Hiroshi Okuyama, President of Skipping Stone Japan, Peter Weigand, Skipping Stone Chairman and CEO, and myself. And I'll be your first speaker today. I'm going to cover the basics of Japan energy market. So let me start off with a brief history of Japan's energy market liberalization. The liberalization in Japan started in 2003 with the opening of JEPX, Japan Electricity Power Exchange. Liberalization progressed gradually then, and the full retail deregulation in 2016 triggered the first inflows of international retailers. But in 2021 and 2022, the wholesale market experienced extreme price hikes due to unexpected cold weather, followed by the Russia-Ukraine crisis. Many domestic retailers stopped expanding because of a lack of risk management skills, and the international players exited because Japanese futures markets were still at the very early stage back then. And as the maturity curve here suggests, more consolidations are expected in Japan, while experienced international power traders and retailers will be entering the market to capture growing opportunities. As you may know, Japan is the largest liberalized market in the world with 89.8 million customers with switching choices. China and US are still much bigger electricity markets, but they're not fully deregulated. Japan is also the second largest LNG importer in the world. Used to be a top importer, but China overtook Japan in 2023. The end of China's lockdown and Japan's nuclear restarts are some of the factors behind it. In Japan, there are 10 zone areas, which are divided into large east and west regions by frequency. East with 50 hertz and west with 60 hertz. Total national demand in fiscal 2023 was 808 terawatts per hour, slightly down from 822 terawatts in 2022. Total East annual demand was 354 terawatts per hour, and in the West, it was 454. This table shows a closer look at demands by area and by voltage category. Even under fully deregulated retail market conditions, 13% of total demand is under regulated plans or tariff. This chart doesn't tell, but even unregulated extra high voltage and low voltage plans are still very similar to tariff models. Why? That's because utilities by nature only rely on cost-based price structures, not by market-based. Also, their legacy billing systems don't support flexible price structures like those you see in other advanced markets. Utilities began gradually and partially adopting market-based plans starting in a couple of years back. However, those attempts are still to very limited extents, and most plans are based on the spot price pass-through to customers model. It is no secret that Japan's generation heavily relies on natural gas and coal imports. Nuclear generators in Western Japan are gradually getting approvals to reactivate, but those in Eastern Japan face more hurdles and they're lagging behind. So Peter will talk more about renewables later, but it is known that Japan has ambitious decarbonization targets towards 2023. Every year, OCTO, which serves as Japan's National Electric Grid Coordinator, releases the electricity demand forecast based on the projections made by each TSO from the 10 regions. This January, OCTO updated their forecast with an upward change in power demand, citing an increase in new construction projects for data centers and semiconductor manufacturing sites as contributing factors. The chart on the left compares the demand projection of the previous fiscal year against that of fiscal 2023. The previous forecast in the gray dotted line shows a gradual decline in power demand as had been forecasted due to Japan's population decrease and power conservation efforts in the residential sector. However, the latest demand forecast in blue shows a completely different upward trend starting after 2023. On the right, you can see the growing maximum power demand forecast, hence driving up load growth on the grid over time. Now, let's move on to the market types and participants. In the wholesale markets, JPX operates the physical, such as spot and intraday markets, as well as base load market to fix for the next 1 to 2 fiscal years deliveries. And Octo is responsible for coordinating 10 TSOs in order to prevent blackouts and to secure nationwide long-term electricity supplies. Now, Hiroshi Okuyama will take over and expand discussion onto the wholesale market.
Thank you, Risa. Hi all. Thank you for watching. I'm Hiroshi Okuyama, President of Skipping Stone Japan. I'm going to briefly walk through Japan's physical power wholesale market. Our first, market structure. Let me start with the high-level flowchart of Japanese power market. This shows the key entities and categories of businesses that structure the physical power market and how they interact. On this slide, I'm going to briefly introduce Octo, JPX, and EPRX. First, Octo, that sits in the middle, the key organization for the power industry supervised by METI, Ministry of Economy, Trade, and Industry. The main role of Octo is to ensure stable and efficient distribution of power across the country, and also to ensure power supplies in the future. Octo runs 2 capacity auctions. Secondly, JPX, the key physical power wholesale exchange. Retailers, generators, and wholesale traders can buy and sell kilowatt-hour electricity through the exchange, mainly spot and same-day market. Thirdly, EPRX. EPRX runs supply-demand balancing market in which balancing and ancillary products are auctioned. Let's take a closer look at each entity and the markets. Next, please. Octo. First of all, to be able to participate in physical power in Japan, you must be an Octo member. To become an Octo member, you must have physical power license from METI and have to have wheeling agreements with regional UTT TSOs. And once you become a member, you need to start submitting scheduling and other periodical compliance findings. Next, please. As for markets, Octo started single-year capacity auction 4 years ago, and this year started long-term decarbonizing power source auction called ATDA. Next, please. This is the first 2 years results of the single-year capacity auctions. The first year results came very expensive at over 14,000 yen per kilowatt, which drew a lot of criticisms. Responding to such voice, the second and the third year auctions were settled at much lower prices. Next, please. At the most recent auction, which is for fiscal 2027, the capacity prices came back higher, especially Hokkaido and Kyushu regaining grounds to over 10,000 yen. And also Tokyo and Tohoku jumped about 50% from the previous year. Next, please. The long-term one, LTDA started this year to encourage investments on decarbonizing sources with subsidies for more than 20 years. Applicable power sources are pumped hydro, battery, thermals co-firing with hydrogen and ammonia, mono-firing biomass, and the nuclear. And also to finance transition period, there's another long-term capacity auction for mono LNG thermal plants. Next, please. This is a result of the first auction of ATDA. For decarbonizing sources, total 234 billion yen was awarded. Batteries were very aggressive and drew a lot of attention, and the amount of application was 4 times more than the preset quota allocated by Octo. As a result, battery was awarded more than its preset quota by switching from unused quota for hydrogen and ammonia project, to which application numbers did not reach the level Octo had initially anticipated. For an LNG combustion thermal project, 178 billion yen was awarded. One thing you need to know about the LTDA, there's a revenue cap. That is the LTDA winners will have to reimburse 90% of non-LTDA capacity income as such trading and power sales generated from such approved assets. Next, please. Next one, JPX. To be able to trade JPX power products, you need to be a JPX trading member. Member qualification requires winning agreements with TSOs, which means you have to have METI license to do physical power and must be an OCTO member. Financial requirements for JPX trading member is net capital of 10 million yen. Next, please. JPX main products are 30-minute spot and same-day markets. Spot market matching is held every day, 10 a.m. of the previous day of the delivery, and the same-day market opens at 5 p.m. of the previous day of the delivery and can be continuously traded up to 1 hour before the delivery. Also, JPX runs baseload market for the next fiscal and the following. Auctions are held 4 times a year. And you can buy transmission rights at JPX called indirect transmission rights to secure future spot price gaps between the regions. But the transmission right is not like FTR in the US. JPX also lists forward markets, but it is not actively traded. Next, please. These are historical daily trading volumes of spot and same-day markets since their inceptions. Last year's spot volume declined from the previous years since many retailers had fixed contracts bilateral with generators and wholesale suppliers, fearing another price hikes in 2023, and also Japan had enough LNG reserves, which may make a market less volatile last year. Same-day market volume has been smaller compared to spot market, but you can see it is picking up lately. I will discuss about this later. Next, please. This is spot daily volume in this fiscal from April. Due to unprecedentedly long and extremely hot temperature this summer in Japan, you can see spot market volume increased by 100 to 150 kilowatt hour daily from July. Next, please. This is the same-day market weekly volume for the last 3 years. You can see the volume started picking up recently as more traders, including international players, started trade same day. And also it is said that the balancing asset operators started to use same-day market instead of bidding into balancing auctions. Next, please. Let's see price activities. At first, spot market. This is a price comparison chart between the last year in upper window and so far this year at the lower window. I picked Tokyo, Kansai, and Kyushu. This spring was somewhat as quiet as the last year, but again, extreme hot weather pushed the floor. About 5 yen started in July. And also unplanned thermal shutdowns in Chubu and Tokyo areas contributed to keep the market steady. Next, please. These are comparisons of spreads between this year and the last year. Tokyo Kansai on top and Tokyo Kyushu at the bottom. One thing obvious is that Tokyo's premiums over Kansai and Kyushu have shrunk this year. On August 30th, Kyushu and Kansai daily average surged over 25 yen due to typhoon and heavy rain, which prevented PV generations in the west regions of Japan. This made Tokyo's premium dipped into discounts to the west by 10 yen. Next, please. Next one is same-day market. This is a daily chart of same-day market from April this year to July. There were spikes occasionally to more than 100 yen kilowatt hour, but did not exceed it over 140 yen until the end of July. Next, please. This is a daily chart of August of the same-day market. There were 2 days, 11th and 16th, in which intraday price reached 999 yen per kilowatt hour, which is the highest price that can be traded at the exchange. Let's take a look at both days' intraday movements. Next, please. This is the intraday chart of August 11th. The market was traded around 10 to 15 yen in the most of the morning time, but all of a sudden it hit 999 yen. It seemed that the buyer input 990 yen, hoping to buy a much lower price, but unfortunately, that wasn't the case. Next, please. This is for August 16th. This day, almost whole day after early in the morning, one or more areas with abundant PV generation continued to hit almost 0 yen. Actually, it was 0.1 yen, which is the lowest price that can be traded, and no negative price in Japan. But all of a sudden, one of the areas that may not be with such abundant PV hit 999 yen. And the one thing you need to know about same-day market, JPX doesn't disclose all of the executed prices and area. Each 30 minutes candle bar commingles open, high, low, and last price from the trades in 30 minutes executed in the whole nation. If anyone interested in capturing this kind of opportunities, please feel free to ask us. Next, please. There are 2 changes under discussion regarding reforming pricing mechanisms. One is about to let the EPRX 45 minutes response time balancing power deliver to same-day market to increase same-day market liquidity. But actually, it has been happening spontaneously. As mentioned, some capacity suppliers have already started choose same-day market instead of going to the balancing auctions. The other reform under discussion is to introduce 3-part offer as in the PGM, in which generators will include startup cost, minimum load cost, and incremental cost curve to calculate offering price to spot market and maybe apply to same-day market. The regulators are hoping the introduction by 2028. But she said that their hope is maybe very ambitious because it will take more time for the grid and IT infrastructures being upgraded to support such changes. Next, please. EPRX. Next one is balancing market, EPRX. EPRX was established by 9 UTT TSOs to run supply and demand balancing market in order for TSO to procure balancing capacities from the wide areas through a single exchange under competitive environments. Next, please. This is a flow chart of how the balancing market works. TSO requests bids for their necessary balancing needs through a single market venue, and registered capacity providers such as thermal generators, pumped hydro, battery, and DR would bid in. Next, please. There are 5 balancing and ancillary products. Introducing 5 minutes and 10-second response time products this spring, the exchange completed lists all of the planned products on board. Next, please. This is a report from METI regarding balancing cost of the first fiscal quarter after having introduced all 5 products. In short, the products were fully lined up, but the market is still young. Due to lack of auction participation from the registered capacity providers, the balancing cost tends to be expensive for utilities. METI is in discussion how to improve these balancing markets to lower the cost for utilities. Next, please. Expected market rule changes. In this August, METI announced a plan to modify renewable energy curtailment orders to encourage investments on feed-in premium project. Since the inception of FIP program in 2022, frequency of curtailments have been one of the big issues that deter investment decisions on FIP. The new order is to eliminate such negative factors. It will not change the basic curtailment order of renewable sources, but changes will be made to deter curtailments on FIP sources. METI expects FIP sources will not be curtailed at the areas with less curtailment possibilities after implementation of such changes. Next, please. Power futures. I love futures. There are two exchanges Japan Power Futures are actually traded, EEX and Toko. CME has CME announced is listing Japan Power Futures, but we don't see any activity yet so far. I will leave Bob-san about EEX, of course. Here I only mention about the Tocom's JJ Link. Tocom and JPX are starting a service called JJ Link, with which power futures positions in Tocom can be delivered to JPX spot market from December 2024 futures contracts. This is it in my presentation. Thank you for listening. I am now passing the baton to a legend, aka Mr. Japan Power Futures, CEO of EEX Japan KK, Bob Takai-san. To Bob-san.
Thank you, Hiroshi, and thank you very much, Skipping Stone, for inviting me to this very interesting webinar. My name is Bob Takai of EEX Japan KK, and for taking about 15 to 20 minutes, I would like to walk you through the updated futures market situation for the EEX Japan power market. Next slide, please. Okay, I'd like to touch upon briefly about the EEX journey in Japan. In 2020, May, that was right in the middle of the Corona pandemic, we launched the Japan Power Clearing Service for the Japanese power futures clients. And in July, I joined EEX team as the man on the ground. And I have been the only man on the ground for the next 4 years. In December of that year, the market participants increased to 14. And in 2021, January, we had the first power crunch in the Japanese power physical market. And due to an increased number of the hedging activities to the futures market, our monthly volume reached 1.2 terawatt hours. The end of that year, the market participants increased to 30. The following year, in 2022, February, as everybody is well aware, we had the Ukrainian crisis happen in Europe. And because of that, the natural gas price and also the power price market surged. And due to the volatility of energy market in Europe, as well as in Asia, in Japan, the hedging activity increased and the market participants increased to 50 by the end of that year. In 23, last year, in June, we launched a daily futures contracts, which I will touch upon later on in the presentation. By the end of that year, the market participants increased to 67. And this year, in February, we had robust financial year hedging activities from the Japanese players. Usually in the Japanese physical market, the people trade the financial year, not the calendar year, which is a bit different from Europe and America. And due to this very robust hedging activity in February, our monthly volume of that month reached 6.6 terawatt hours. And in May, EEX AG decided to establish EEX Japan KK. And I am in charge of that company right now. And in August, because of the extreme weather, typhoons and heat waves and heavy rains, our monthly volume reached 7 terawatt hours, which is at this moment the monthly traded volume record. And our market participants increased to 82 companies. But in September, actually, we are having another active trading month, and our market participants increased to 84 as of today. And our traded volume already reached 6 terawatt hours as of 2 days ago. So it's very likely that September is going to be another record-breaking month. So as you can see, we had two crises, one in 21 in Japan and in 22 in Europe. And because of that, the people's mentality towards the hedging has certainly increased in the Japanese market. And our market participants increased by 6 times from the time that we launched the product up until the present day. Next page, please. So this is a movement of the spot power price at the JEPX on a monthly average basis. As you can see, we had so many crises and shocks starting from the corona pandemic. And like I said, we had the Japanese market crunch in January of 21, which is followed by the European energy crunch towards the end of that year. And also in 22, we had the Ukrainian crisis, which pushed up the gas price to an unprecedented level. But after that, because of the ease of the tension, the gas price plunged from a historical high level over 300 euro per megawatt hour down to 30. And then that situation was followed by the Middle East conflict in Israel and Gaza. And right now, having this tension expanded to spread out to rest of the. And like I said, we had a very robust hedging activity by the Japanese companies at the end of 23 and also the beginning of this year. And because of that, the volume increased in EEX Japan power market. So as you can see, over the last 4 years, the price swing is in between 5 yen all the way up to 60, 70 yen. So this volatility increased the risk management mentality among Japanese power companies. So this contributed to the expansion of the market. Next slide, please. This chart is showing a monthly traded volume of the EEX Japan power market in gigawatt hours. As you can see, from 2022 to 2023, the annual traded volume increased by 2.7 times. And in 2023 to this year, 24, up to August, the volume increased by another 3.4 times. So the multiple increases over the last few years, our market is now a very liquid power futures market. 4 years ago, there was no such market in this in this liberalized market in Japan. So it's a big change over the last 4 years. And currently, our market share in the Japanese exchange-traded power futures contract reached 99%. And if I compare the size of the volume done in the spot market, which is JPX, EEX Japan power market is about 30% of the physical spot market. But many of you who have been trading the power market all over the world is very aware that in Germany, for example, the most active power derivatives market in Europe, the size of the power futures market is about 10 times bigger than the spot market. So I think the potential for the Japanese futures market is very, very high if you compare the two markets, Germany and Japan. Next slide, please. So what are the factors behind this unprecedented market expansion? And I can explain from both external and also internal factors. The first factor is the external factor, which I explained well, volatility in the last 4 years in the energy market globally. And we have been having unprecedented geopolitical risks. And geopolitical risks created multiple shocks in the energy markets, in gas market, LNG market, and eventually the power market. Second factor, which is an internal factor, is diversified players of the EEX Japan power market. In order for the futures market to be successful, you need to have a mixture, well-balanced mixture of the hedgers and also risk takers. And in the EEX Japan power market, we actually materialize this very well-balanced mixture of these two types of players. And the second factor is diversity from a nationality point of view. And right now, the market participant in the EEX Japan power market is coming from 15 different countries. So this diversity in terms of the mixture of the power players, as well as international aspect of those types of players, is making this market very, very liquid market. Third factor is a wide range of futures products. We have products across the forward curve. I will explain that later on in detail, but we have daily futures, weekly futures, monthly futures, quarterly, seasonal, and also calendar futures. I will also explain some of the new offerings that we plan to launch in the coming 2 quarters later on my presentation. Next page, please. Okay, so this is product specifications. We have 2 areas that we have the futures products available in the EEX Japan power market. One is Tokyo, and the other one is Kansai. And like I said, we have varieties of products across all the forward curve, starting from day all the way up to the year. And currency is Japanese yen, and a unit is Japanese yen per kilowatt hour. And tick size is 0.01 Japanese yen per kilowatt hour. And lot size is 1 megawatt, which is 1,000 kilowatt, which is slightly different from a domestic competitor, Tokyo Commodity Exchange. Our size is 10 times bigger than the TOCOM's lot size. And the minimum lot size is 1 lot. Next slide, please. Okay, so what kind of products are actually traded in the EEX Japan power market? So this chart is showing the share of the products in megawatt. Let me just briefly tell you which color is what products. yellow color is a monthly products, and the blue color at the top is a quarterly, and the green color is a seasonal. And by seasonal, I mean summer season, which start from April until September, and the winter season is starting from October up until the March the following year. And the gray part at the bottom side is a weekly contract. And the blue part at the bottom is a daily contract. So, as you can see very clearly, monthly products are the most popular contract throughout the year. You know, the yellow part of the bar charts. And then the seasonal contracts are preferred during the annual hedging season. In Japan, the Japanese power traders negotiate the financial year physical power contract in the period starting from November, December, all the way up to February. So DEC, Jan, and Feb, those 3 months are usually the hedging for the next fiscal year is actually very actively done in the futures market. And also dailies and weeklies are traded as weather gets very unstable. For example, you know, this summer in Tokyo, we had the heat wave, and also we had a number of typhoons coming. So in such situation, people tend to trade much dailies and weeklies to hedge their short-term, very short-term price fluctuation. So in summary, let me just tell you, in the wintertime, in Q4 and Q1, we tend to have many seasonal contracts traded in EEX Japan Power. But in the normal time, the monthlies are most preferred by the traders to trade. And when the weather gets very unstable, people enter the market to trade the dailies and weeklies. Next slide, please. Okay, so who are the people who are trading EEX Japan Power Market? At the end of August this year, we have 82 companies who have traded EEX Japan Power Market in the past. The breakdown of 82 are 39 Japanese companies and 43 international companies. As you can see on the Japanese company side, we have a mixture of retailers and utilities and major trading houses, financial players, and the renewable company. And on the international player side, we have a mixture of European power traders, financial companies, and commodity traders, and also oil and gas majors. So it's a very well-balanced, well-mixed players portfolio that we have in the EEX Japan Power Market. And this year, excuse me, this year we had 15 new participants joined up until the end of August. And in September, we had 2 new players joined. So as of now, 17 new participants joined our market. And in terms of the international players, 10 plus international players have actually Tokyo offices, legal entities in the Japanese market who are trading the physical market. So a number of these international companies who are coming to Japan and setting up their shop in Tokyo, the number has been increasing in the past. I think this trend is going to continue for going forward. So if I regard those international companies who have a Japanese office are the Japanese companies, and then about 60% of the traded volume is done by the Japan-based players. So coming to Tokyo has some advantage, I think, in trading the both futures market and also the Japanese physical market. Next page, please. Let me touch upon what is going to happen for the rest of the year. The first point is our major annual event, which is called Japan Power Summit is coming up on the 23rd of October. And this event is a joint event with our competitor, friendly competitor, Tokyo Commodity Exchange. And the venue is Otemachi Sankei Plaza in the middle of Tokyo business area in the afternoon, starting from 1 p.m. up until just before 9 p.m., including the party. And this year, we are expecting the guests up to 500 people. We are now getting the numbers right before the event. The number has been increasing at this moment. So I think this year we are going to have a very actively attended event. And we will have speeches from our regulator, METI, and also a couple of industrial leaders from the power market, energy market, is going to make keynote speeches. And then we'll have the traders panels. One is Japanese power traders panel, and the other one is international power traders panel. So those panel discussions are going to become a highlight of the event. And also we will have presentations from both host exchanges. And I think both exchanges will talk about the new product offering for the rest of the year. And this event will be available on a virtual basis. So if you are interested in listening in, please contact the EEX Japan Power team anytime. And lastly, let me touch upon some of the new products launch that we have in our agenda. And first one is extension of the seasonal contracts. Currently, we can trade up to 3 seasons out, but by the end of Q4 this year, we will enable the traders to be able to trade up to 7 seasons out. And the second one is the Japanese fiscal year contracts. As I said earlier, the Japanese physical power market is based upon the fiscal year rather than calendar year. So it makes a lot of sense for the physical Japanese power players to hedge their fiscal year price fluctuation. So therefore, we are going to enable those traders with the fiscal year futures contracts. And this one is probably likely to come towards the end of January next year to early part of February. So Q1 next year. And on this one, we will enable the traders to be able to trade 6 financial years out. So that means up to financial year 2030. So this length in forward months, forward period is going to give advantage for power players who would like to trade the long term. And the third one is options contracts. And this one, at this moment, we are thinking about the average price options on the monthly contract basis. And the timing of this launch will be in Q1 of next year. And lastly, order book. Order book, by which I mean the screen-based trading. Over the last 4 years, EEX Japan Power offering has been done on trade registration basis only. So we did not have any screen-based trading, but based upon a lot of requests from our clients, we decided to launch an order book, screen-based trading. And this one is likely to come before the end of this year, so Q4 this year. Okay, and next page, please. All right, so this is 3 of us in Tokyo, and we are very happy to talk about EEX Japan Power Market anytime. So please contact us if you are interested in entering the Japanese power futures market. Thank you very much.
Thank you very much, Takai-san. And we're moving on to Peter's presentation now.
Thank you, Bob. You deserve a mountain of credit for building the Japan market. And what you're doing is incredible. And a couple of notes on what Bob and Hiroshi both said. I think Bob's right on target. the number of international players and the volumes at 30%, I fully expect within 2 years it'll be at least 100% of the physical market and the futures market. The other comment I want to say is the event on the 23rd that is hosted by EEX with Tokons. That entire week has a number of events. So if you have a chance to come to Japan and you want to meet all kinds of different companies, a lot of international players will be there. That's the week to come, and we'd love to host it ourselves. So what I want to focus on is now that we've got a good flavor from Hiroshi and Bob and Risa on I'll call it the commodity market, I want to talk about the different opportunities in Japan, which each one of these could be an entire webinar and a lot more. So big changes in Japan. Net zero is one of my topics. That's changing everything. And it's kind of interesting. It's a perfect storm of sorts. You have net zero laws, and you have deregulation or liberalization, as they call it in Japan, now 8 years in and rapidly growing after the Ukraine, I call it pause of sorts, and COVID pause. So talk about that. So you've got laws changing, retail markets changing, wholesale markets just doing nothing but growing, trading, and the technology and so forth. So as I get into these, let's go to the next slide. So a couple of years ago, originally the renewables developers, it was pretty simple business. You built it once you first of all, you won a MEDI auction authorizing you at a price to build a solar or wind, and the utilities were required to buy it at the feed-in tariff set by MEDI. But 2 years ago, that changed into the feed-in premium, where the utility no longer is required to buy whatever the developer builds. Instead, the developer has a choice of either taking a premium based on the JEPEX formula of a monthly average or finding an off-taker. So a majority of developers in Japan, and there's lots of international developers coming in, both offshore wind and onshore solar, and we'll get into BESS in a minute, batteries. A majority of them don't have the major balance sheet to do this on spec, so they really need off-takers. The PPA market in Japan with the corporates, because of the net zero laws, corporates have to reduce their footprint. And a survey we did about a year or so ago, about half of them plan to do an offsite PPA, which makes sense. So there's about 8,000 corporates that are going to need to do a PPA in the next 2 or 3 years, maybe 4. And there's only been about 20, almost 24 PPAs done to date. So it's a very, very early market for PPAs, but the demand is going to be there because it's a law, which is really encouraging. But the Japanese corporates are going to eventually be the off-takers. That, of course, will drive hedging. It'll drive spot market, all kinds of things. So that's a big opportunity, especially for international players who can do, PPAs, provide services to the developers, either an aggregator, which is a different kind of license, or a PPS, which is a retail license. And the developers need off-takers and financing of projects. So that's a huge opportunity in Japan. Next. So transmission is probably not an opportunity per se, but I wanted to highlight it because it's a huge issue to bring, especially the offshore, and to expand the connection between the mainland utilities, not County Okinawa, so that there's more liquidity physically between the markets. Utilities have no incentive to build this because they're all in a revenue cap scheme. The government doesn't really have the funds either, although they allocated 7 trillion yen, but they also pretty well made it clear that's not nearly enough. They're considering a surcharge to the customer bills, and we've introduced and been talking to them about the private merchant transmission that you do see in the US and some other places. So transmission is a potential bottleneck for renewable growth in Japan, because it's a huge problem to build it out. That's not unusual in any other market globally. Next. Offshore wind, several auctions have been completed. It'll be at least 2030 before you see the first megawatts. Highlighting the last slide where we talked about the transmission. I don't need you to go there, but we talked about the transmission. As you can see from the chart, a lot of that offshore wind is not anywhere near Tokyo and Osaka or Kansai TEPCO, whichever. So that's why a lot of the transmission, the government's trying to push up in the red area, which is Hokkaido, which is where a lot of it's coming. They're trying to push data centers, chip manufacturers, and other businesses to move there or build a plant there to soak up some of that renewable. We'll see how that works out. And then you can see the bottom of the offshore targets is just continuing to grow. Next. So battery, the initial auction total of 1.6 gigawatts, 32 battery systems plus pumped hydro. Several international players won some of these projects, actually quite a few of these projects. And then the government will subsidize that as well. So that's partly the METI bidding process. There's more auctions coming. I expect to be an auction every year for quite a while. There are arbitrage opportunities besides, for the batteries. We see this in other markets. The bottom, you see the duck curve. Kyushu already has a duck curve issue where afternoon, JetPix doesn't go negative because the government doesn't let them yet, but it goes to as low as it can be possibly. So you have that opportunity for batteries plus just for trading. As you can see from Hiroshi's charts, the spot market intraday prices have continued to be volatile, whether that's weather or whether that's LNG or what have you. So best opportunities is going to do nothing but grow. Most of the ones that Octo did on this BESS auction are utility scale. We're just beginning to see, primarily at the corporate level, industrials, behind the meter batteries, more and more behind the meter solutions besides the batteries. Obviously, the on-site solar demand response is growing very well in Japan. So this all becomes, very, very positive and a lot of opportunity, especially for international companies that have done this in other markets and know the risks and know how to value this and know how to, know how the game works, if you will. And then many of the Japan companies are learning from international or partnering with international companies to get that education. Next. So we're starting to see, in fact, I think it was Kansai just announced last week that the batteries are going into the balancing market, which I think is going to help the balancing market a lot. Given how much time we have, I'm not going to spend a lot of time on that, but just wanted to point that out as another revenue stream. Next. Hydrogen, Japan has pretty well made it clear, METI and the government, they plan to be the #1 hydrogen country in the world, just like they were LNG up until recently. So they see the reduction of their ability to get to net zero is really going to be dependent on reduction in coal and eventually gas. How much gas, debatable. In my opinion, it will never be zero, but that's just me. Money is flowing to subsidize hydrogen in all sorts of forms. In Japan, electrolyzers, storage, they're building ships now. So typically the way that works, unlike IRA money in the US where you get a grant, mostly they are public-private projects where a technology, maybe an electrolyzer, for example, or something like that, partners up with a host for that and an EPC to build it, and they apply as a team, and they get subsidies out of this funds. That funding expected to grow substantially. Next. So the retail market, which is really interesting. The retail market has shifted dramatically in the last couple of years, and it needed to. The first, from 2016 to 21 or 22, it was pretty much everybody, you know, the number of retailers grew to roughly 850 or so. Then the shock waves of pricing, whether that's JPEX or futures or both, a lot of the smaller and medium players had no idea how hedging worked. Risk management was not a thing. So many of them went out of business due to the lack of, to the volatility and not inability to manage price risk. Even the utilities in 2022 with the Ukraine and the LNG lost records amount of money. So the utilities generally, not all of them, but most of them got a rate increase of 20 to 40%, which actually helps the competitive retailers because they have a different threshold. Medi has made applying for a PPS license much harder, much more stringent. If you're a trading company, you don't plan to actually have end-use customers in the near future, it's really difficult to get a license because Medi wants to see is that you're planning to be a retailer. So many, and most, in fact, wholesale traders are buying PPS entities, changing the legal structure, and Medi's fine with that. We've done, I think, 8 of those. And then the other thing that's changed is market-based pricing has finally become a reality. Up until, I want to say 18 months ago, maybe, the standard offer was what looks like a utility rate with a fuel cost adjustment. And that's what everybody sold, and that's what most people bought. We're now seeing the demand for fixed prices and blocks and indexes, things you see everywhere else in the world. The number of retailers that actually do that is very small. I think we saw in Bob's numbers, there's like 20 odd retailers in Japan out of 700 of them that are actually hedging. That's only going to grow. We also, we'll show you in the next slide, but customers want pricing plans like everywhere else in the world because they've had a wake up call with the price, you know, the volatility and the pass through. Next. So this is our survey we did the end of last year. As you can see, this is the corporate customers survey. This is not residential. So most, you know, 43% want the fixed prices, or you know, combination of fixed and market price. We call it block and index, but that's not something understood in Japan very well. So you can see the shift from we want a utility tariff with a fuel cost adjustment, which only, you know, not very many people wanted 7%. So there's really an opportunity for international companies to understand how the retail market works and have the systems, for example, the billing. Most of the retailers in Japan bought a billing system back when they launched a few years back. They can't do these things. They can't do the fixed pricing. They don't have a risk system, or they don't understand how to do that. So I think this is a huge opportunity to come into this market and go after these corporate customers or mass market if that's what you're interested in. Next. So the technology, when you think about we're moving to a net zero market, which changes, you know, maybe people call it transition, and you've got a growing wholesale futures and physical market and a shifting retail market and a switching out of, you know, all kinds of things. That means the technology, and I separated them. This is not a complete list. The blue is software and the green is hardware. ETRM, you know, I think that's only going to grow. We've seen what 6 or 7 of them, you know, do that. Another 10 or so in the process of figuring it out. But that's the tip of the iceberg. The settlement comes with that, scheduling, billing, the complex billing, or the ability to do solar or commodity or EV charging or any of those kind of mix. That's a huge opportunity in Japan. Almost no retailer I can think of, well, maybe one, offers that in you know, to one customer. It's different companies, different entities. So that's going. Hydrogen, obviously, ESG reporting, because you have what 8,000 corporates that have to comply. optimization, whether that's BESS or whether that's just demand response or what have you. So distributed energy is obviously huge. EV charging, Japan has laws around when fossil cars will no longer be able to be sold. So there's a huge push to build EV charging network, and there's of course software with that. So one of the things that I want to mention is if you're going to sell technology of any sort, you have to have a presence in Japan to be successful. It's really, really hard to get into that market remotely without people on the ground that speak Japanese and a presence there. Okay, next. We do a lot of market entry. We'll talk about it at the end, but typically stages we work through are the planning and the business plan, then the launching, and this one's sort of aimed at retailers or trading companies. You get incorporated, you set up a local staff, you get your membership, your licenses. If you're a technology company, you don't necessarily have to incorporate, and you don't really need a license or an OCTA membership, but that's a little different. Once you've got those, then you can become your JEPIX member, and you can get your wheeling agreements so that you can schedule across, and without that, you need that for JEPIX. And of course, there's systems and people. So a lot of people that come into Japan think they need to staff up in Japan right away. Many companies we've brought in start with one and outsource various and sundry functions, and then grow it as the volumes and the profit justify. Next. So the getting a license, you can apply, build it, incorporate local presence. You got to hire people. You apply through METI. It says 12 to 18 months. We are familiar with a trading company going through this right now that decided to apply. They're in month 20 right now and don't have a license yet. So that it's fuzzy. There's not a hard number of how long it takes. Most companies buy an existing company with the licenses and the memberships and the wheel agreements already in place. Then they can get into the market much quicker. Next. So for technology companies, the path is somewhat similar. Japan presence in that case, at least an office, it doesn't have to be a permanent one, but your website needs to be Japanese. Your collateral, you need an educational campaign, PR, having companies be aware. Your business development, you definitely need a bilingual. You definitely need Japanese people. Japan corporate culture, it's relationship selling. So cold calling doesn't really get you anywhere. If your software and your demo is not Japanese, good luck. Proposals in Japanese. And you need to understand a budget cycle for purchasing technology. I think Bob alluded to the fiscal year. Fiscal year for pretty much most companies in Japan starts April 1st. So the proposals and the getting serious about budgets start November, December. Decisions get made in the first quarter. So if you're not there by fall, you're missing most of the year. Next. So I think that wraps up my part. We all want to come back on and do the Q&A. I don't know, Risa, how much time we have left. I haven't been tracking.
Thank you, Peter. We're running out of time now, so we'll follow up all the questions by email, and we'll also send our presentation and the recording of this webinar. If you'd like to talk to us directly, you can email us or come see us at Japan Power Week in the 4th week of October. We'll be there in person, and we look forward to continuing the discussion with you if you're attending as well. Thank you again for joining us, and please feel free to reach us for any questions. Hope you have a wonderful rest of the day. Bye.